Okay. You have mentioned that compared to the historical price-earning multiple of 16, it is trading at 14 multiple right now. But what we have seen over the last few years that the price-earning multiples globally have come down for equities. So why do you feel that it's still be trading at 16 instead of 14, which seems to be the right to me?
Well, we believe that there is still potential for them to trade back to the historical average of 16 times, primarily because the company has a lot of forward growth potential that the market hasn't fully priced in. So take it for example, when we saw the release of its fourth quarter earnings recently, there was a wave of upgrades across the street, and clearly the market is unable to price in the growth that OSIM offers. As a result of that, we believe that moving forward, when the earnings growth potential becomes more visible, it can trade back to a historical average of 16 times.
Can you let me have an understanding, who is the competitor universe for them?
Perhaps I can take that question. So we analyze it in terms of two things. Number one, marketing, and number two, technology. So looking at this matrix, we see that in terms of retail strength, Otto, Ogawa, as well as OSIM, even though OSIM is relatively more well-known, have the same marketing expertise. But in terms of technology, because OSIM constantly rolls out its product, being the first mover in many things, it is technologically superior. However, looking at Japanese peers, they have many complicated massage chair products and might be on par with OSIM in terms of technology.
And
but
they're all targeting the same markets, presumably?
Yes, they are all targeting the Pan-Asian market predominantly.
Right. And why do you think that within China they can keep margins as they are currently? You know, I think that within China it's very hard to actually make money. Everybody says it's a growth economy, but it's very hard to make money in China. Why do you think that the margins will actually be sustained as it is and not come down in your projections?
Well, when we looked at OSIM's positioning within China itself, it's currently priced at the top of the range itself compared to its peers. So the recent U-Divine Sport is launched at 8,888 Sing dollar. And however, in spite of the high prices, we see that this product is currently sold out in China itself. Clearly, the premium positioning of OSIM appeals very strongly to the Chinese consumer. Furthermore, the McKinsey report has also reflected that increasingly consumers are shifting from purchasing Chinese-made massage chairs towards internationally well-known brands. So we believe that OSIM is indeed well-positioned to capture this shift in consumer preferences, and hence we believe that they can maintain its margins.
I don't think there will be another copycat OSIM in China.
Interestingly, in China, as you pointed out, face is very important. So when people buy OSIM, they're actually buying into the brand and not just purely the technology itself. China, as seen by the previous matrix, has achieved the highest brand awareness and also the highest internationally acclaimed brand within Chinese massage chairs. So we believe that through this brand dominance, as well as, of course, the face preference in China, OSIM is poised to succeed.
It's just referring to an earlier slide where you say Ron Sim has 76% of the company. And then, you know, the name, you know, OSIM and Ron Sim sounds, you know, very close. And then you look at the way the acquisitions have gone from GNC, Brookstone, and, you know, TWG and all that. How much is he a control freak, you know, in this whole company? And second is, every focus is on Asia, but in 2005, you got the US market.
So allow me to take this question. In terms of the acquisition, we see mixed results. As you have pointed out, Brookstone is a US-listed retailer, and it was declared bankrupt and written off from their balance sheet. So OSIM has had mixed results. In GNC and TWGT, it is highly successful. And management has indicated to us that in these acquisitions, it has learned two big lessons. Number one, Pan-Asia is where they understand customers best, and that's where they intend to be. Number two, in terms of deploying their marketing strategy, having a dominant control in the ventures such as GNC and TWG, which was absent in Brookstone, is critical as well. Addressing the earlier part of your question, which is about Ron Sim, we believe Ron Sim's stake is being very high on OSIM, has his interests very well aligned. 76% of his net wealth is actually derived from OSIM itself, and hence we believe he will not act against his own interests, and therefore both of them are aligned.
All right. I have actually two questions. The first one is about the sustainable position of OSIM regarding their competition, and what makes you think that the competitors will not copy the core competence of OSIM, taking into account the relationship with the Japanese R&D partner and the chief technology officer. I think that there is some kind of risk here if the competitor will do the same. And that's the first question. What you think?
So, when we examine technology, we understand, however, that it is indeed easy to copy. In fact, if we look at Japanese peers who really are the pioneers in the massage chair industry, and of course, OSIM indeed quickly caught on the trend, being inverse and succeeded. However, what these people are unable to replicate is the marketing strength of OSIM. If we notice market share, OSIM is indeed the brand leader in all markets, in almost all markets that is dominated in Asia, and in China it's only 14.5%, but it's still the market leader. And branding is something that we think is hard to replicate, because once it's etched in the consumer's mind, even another competitor coming out with a similar product might not be able to attain the same utility for the consumer.
All right.
Can you tell me what is the succession plan as far as management is concerned in the areas of technology and marketing? Because these are the two important areas for the company.
So allow me to address that question. I think management is right now moving on to a more structured approach. So previously, when they were exploring all these key and uncertain markets, they first adopted a blanket-wide store approach in China. So they literally opened stores in Tier 1, Tier 2, Tier 3, and even Tier 4 cities. But right now, they are focusing all their attention to Tier 1 and Tier 2 cities, as seen from the store rationalization plan, and adopting a more structured, formal approach. That is, creating brand awareness. So recently, they attained a variety show coverage in primetime TV on Chinese television. And so what we see is that instead of being very uncertain about their marketing plans and trying to figure out which market is good for them, we see that OSIM is right now very certain in terms of the rollout of plans. So having established a brand, it now moves on to increasing average revenue per store.
Yeah, may I add on to the question as well? On the note of key management, I would like to bring your attention to management as well. OSIM has, apart from just Ron Sim, who is the founder of the company, they also have key management who are very much proficient in the key areas they would like to grow the company. For example, Mr. Richard Liao has a lot of experience in retail business in China. And this is one key area that OSIM is looking to grow. So on the count of management, I would say that we have the right people for the right job.
I presume the marketing expense is going to grow as a percentage of sales, given as you said marketing is so important and they just signed on Sammy Cheng in Hong Kong. And what is the percentage of sales you think it will grow?
Well, historically, OSIM has always engaged in celebrity endorsements itself. And yes, indeed, marketing is a large part of their expenses at approximately 5% of revenue. However, we don't expect to see it increasing as a percentage of revenue, given the fact that OSIM has always been using celebrity endorsements. OSIM has always been endorsing multiple events. And so clearly, moving forward, we expect margins to stay flat, even though we see that in recent times they engaged Sammy Cheng as well.
Well, OSIM is expanding into the new businesses like TWG. What makes you think that this is a value-creating business instead of, say, the other way around? Because I think this is this kind of business model is totally different from what they are doing right now.
So, well, if you look at TWG on the surface itself, it does appear that it's very unrelated to massage chair. However, I think what is really unique about TWGT is the fact that it taps on the complementary skill sets of OSIM, which is a pan-Asia focus, as well as an expert at retailing luxury product. So clearly, TWGT is in the same segment as OSIM itself. And our physical due diligence down at the stores in Hong Kong as well as Singapore indicated that TWGT is indeed very well received by customers. The stores are always full. And in fact, these stores have no lag time. The moment the stores are open, they're immediately operational and profitable according to management. As a result, we believe that TWGT is indeed a value accretive business and not value destructive.
Did they give the breakdown for the profits of the, that 25%, which is not chairs?
In particular, for TWGT business, it was just acquired in 2011. So there has been no separate disclosure of revenue for that particular business unit.
What do you think is the biggest threat for the company?
We see two big risks in terms of our valuation. So we note that China is going to be the next big market, and we note that margins are going to expand slightly as well. So addressing the point on China as the next big market, we see three reasons why we can be really optimistic about China, even though the retail market is slowing down. Number one, luxury spend in China is going to continue to grow.